The live intraday price for Bitfarms Ltd, under the ticker BITF on the NASDAQ, is currently sitting at $2.78 USD, reflecting a significant drop of approximately 12.30% so far today, November 13, 2025. This dramatic move, with the stock opening at $2.73.5 and seeing volume already nearing 50 million shares in the morning session, nearly double its average, is the immediate raw reality investors are facing. The expectation, which has been baked into this stock for a while now, centered on the company's ambitious strategic pivot away from pure Bitcoin mining toward becoming a more diversified digital infrastructure and energy company, heavily focused on high-performance computing and artificial intelligence workloads. Many investors, particularly those using accessible tools like the Robinhood app or SoFi Invest for self-investing, were looking for the third-quarter earnings report, released this morning, to offer concrete proof that this transition was successfully translating into better numbers, or at least a manageable loss. The deep, contrarian angle that is driving this massive sell-off is not just the earnings miss itself, but the stark contrast between the aspirational narrative, the AI pivot, and the immediate financial strain this transition is imposing. Reality here is sharply falling short of expectation. The market generally believes that this strategic shift is a necessary and smart long-term play for any crypto miner to survive the ever-challenging economics of the Bitcoin halving cycle and the intense competition, especially after seeing similar moves by peers. This belief system is what has kept the stock resilient despite the volatility inherent in the broader crypto space. However, the reported GAAP EPS of minus $0.08 significantly missed the analyst consensus of minus $0.02, and revenue came in at $69.3 million, missing the expected $84.7 million. This isn't just a minor miss, it's a wide berth that tells the market the costs associated with this pivot, including capital expenditures and initial operational adjustments, are currently outweighing the benefits. While the company is positioning its Washington site for AI workloads and aligning future builds to support powerful GPUs like NVIDIA's next generation, the current numbers illustrate a painful present. The market is not questioning the idea of partnering with companies leveraging the massive growth in NVIDIA stock, but the market is heavily discounting the execution risk and the time it will take to see a financial return. This tension between a necessary long-term strategy and poor short-term execution is what you see playing out in the daily price movement right now. Looking at the immediate stock movement, the sheer volume on this down day is noteworthy. Over 49 million shares trading hands by mid-morning indicates a significant and forceful repricing by both institutional and individual investors. This is often the sign of a washout, where conviction is tested and stops are triggered. The stock gapped down heavily at the open, a classic signal of a material, unexpected negative development that was digested overnight. The low for the day has been $2.71, just shy of the current price, suggesting that while the initial panic sell-off was fierce, there might be a thin layer of support forming around this low $2 mark. This level may represent the price at which long-term investors, perhaps those believe strongly in the long-term value proposition of the pivot, decide to initiate or add to their position, betting against the immediate bearish sentiment. The fact is the 50-day moving average is now miles above the current price, indicating that the short-term trend has definitively broken to the downside. The relative weakness compared to the overall sector is a clear indicator that this is a company-specific event, not just a macro crypto move. The institutional activity data, though often delayed, provides some context to the level of professional interest in Bitfarms stock. As of the last available filings, institutional ownership has been active, with a significant number of institutions like Invesco and Charles Schwab Investment Management, Inc. increasing their positions, while others maintained held positions. This suggests that a variety of professional money managers were, until recently, buying into the growth story and the strategic shift, viewing it as a valuable opportunity within the digital asset space. For those who invest online and perhaps using an individual brokerage like Fidelity or using a platform with investment help like the Schwab Intelligent Portfolios or Interactive Brokers trading platform, seeing institutional movement can sometimes validate a thesis. However, today's sharp decline means a critical number of those recent buys are now underwater, and the reaction of these large holders in the coming days will be key. If they begin to liquidate in size, the downward pressure will be sustained. If they hold, it suggests they see the recent earnings miss as a temporary setback in the larger transformation story. To understand why this earnings miss hit so hard, we need a brief look at the core business. Bitfarms Ltd. is fundamentally a Bitcoin mining operation, running highly efficient, vertically integrated data centers primarily in North and South America, utilizing predominantly hydroelectric power, which gives them an edge in terms of power cost and sustainability narrative. Their main function is to validate transactions on the Bitcoin blockchain and in return receive newly minted Bitcoin. The entire business model and the company's revenue is inextricably tied to two variables: the price of Bitcoin and the global Bitcoin network hash rate, which dictates competition and the difficulty of mining. The company's historic performance has been a classic example of this high beta relationship. When the price of Bitcoin surges, Bitfarms stock often surges harder, and vice versa. They have seen growth, but also considerable volatility and losses, hence the aggressive and necessary shift to diversify. The recently announced strategic moves are what made the stock interesting beyond the typical volatile Bitcoin correlation. Their stated intention to transition toward a North American energy and digital infrastructure company, particularly with a focus on high-density data centers suitable for AI and high-performance computing, is directly targeting the explosive growth seen by hardware providers like NVIDIA stock. The core attraction for this pivot is their vast energy capacity and infrastructure, which is a limiting factor for many AI-focused data center operators. For those who invest online and follow the broader tech space, the idea of a cheap, existing energy footprint suddenly hosting high-margin AI workloads is deeply appealing. They recently announced plans to convert their Washington site and align future builds with cutting-edge GPU support. The immediate reality check, though, is the cost of that conversion, the timelines, and the fact that they haven't secured long-term, high-value contracts to make that a financial reality yet. The market is selling the show-me gap between the announcement and the delivered results. When you look at the technical picture today, the $2.71 intraday low is absolutely crucial, a psychological and technical support level. Breaking below that figure could accelerate the downward momentum, potentially pushing the stock back toward the lower end of its recent trading range, possibly testing the $2.50 area, which provided a base previously. Above the current price, there's a significant resistance wall around the $3.17 previous close and the $3.49 50-day moving average. For a recovery to even begin, the stock needs to recapture the ground lost on today's massive gap down. The trading volume, while high, is almost exclusively pointing to selling pressure, which makes any quick bounce unlikely without a material, unexpected catalyst. The trading of BITF stock has become a high-stakes bet on the successful, timely, and capital-efficient execution of a complex business model pivot. This is an environment where professional tools from a provider like Interactive Brokers Platform, which offer advanced charting and order types, become more critical than the streamlined user experience of the Robinhood app, because the volatility requires precise risk management. The future outlook for Bitfarms is split into two distinct, clashing timelines. The near-term outlook is undoubtedly challenged by this earnings disappointment, the cost of the pivot, and the lingering uncertainty around Bitcoin's price performance heading into the next halving cycle. They must navigate a period where they are spending heavily on infrastructure to host AI workloads, while still generating the bulk of their revenue from a lower-margin, capital-intensive Bitcoin mining operation. Management's ability to secure large anchor tenants for the new data center capacity in Washington and their planned facilities is the single most important short-term catalyst that could overcome today's negative sentiment. A surprise announcement of a major multi-year contract with a significant technology